All right, that's the HDFC management taking us through the earnings. Abhishek, thanks very much for taking us through that conversation. Now, the other one is Ashok Leyland, which posted a solid third quarter earnings with revenues rising over 60% and margins expanding by 500 basis points this quarter. Additionally, the company has also seen a 23% jump in total sales for the month of January. Gopal Mahadevan is CFO and Whole-time Director of the company. He's joining us now to take a few questions. Mr. Mahadevan, good to have you with us here. How much market share have you gained recently? Could you tell us what the progression has been like and what is it now?
See, over the last 9 months, our market share has actually moved from, we have gained about 6.8%. We are at 31.7%. And so if you look at that from, if for the quarter, we possibly have gained about, again, almost the same number. So, we have steadily been increasing our market share. Our revenues have gone up, our margins have improved. And over the, I would say the quarter, we have also generated cash and our net debt levels are also quite comfortable. So overall, we have been quite satisfied with the performance. And we have gained share across product segments and predominantly across all product segments and also across geographies. So, it has not been just a pure select geography in which we have gained market share.
All right. Sir, what could growth look like in FY24, both for the industry as well as for Ashok Leyland?
We haven't given an outlook, but hopefully we are expecting that the growth in FY24 should be double digit.
Do you, Mr. Mahadevan, do you think that you can get back to double-digit margins, perhaps in the first half of next year? What's the outlook on the operational front?
So we are, over the medium term, looking at double-digit, for a full year basis, we are looking at double-digit expansion. And this will happen through a confluence of factors. One, we're assuming that the industry will continue to grow. We will continue to pursue cost efficiencies, people productivity. The third one is in all the alternative businesses, right? Like light commercial vehicle, spares and aftermarket, power solutions, defense, and most importantly, international. So we have certain plans to grow these areas of businesses as well. And these are higher margin businesses. So when you have a mix of, the large commercial vehicle business as well as the grow businesses, you would see that, it is quite possible to actually achieve the double-digit margin expansion.
Okay. Just one last to round it off with the budget, since we had this earlier in the week. How did you read the budget? And, pointedly, what does it throw up in terms of specific opportunities for Ashok Leyland?
I think there are 2-3 growth drivers that have, been mentioned in the budget. One is, of course, the GDP growth itself. The forecast India will continue to be one of the high growth economies in the world. The second one is sector specific. As you mentioned, there's a lot of focus on infrastructure, which augurs well for the commercial vehicle industry. The third one is, of course, I think there has also been some good news on the real estate front, which possibly will help. And the fourth one, I think at some point in time, the peak interest rates that we're seeing today will start to taper off, which is, again, another favorable thing that can happen. Because despite the interest rates hardening, we've seen the commercial vehicle industry doing well. We believe that, once the interest rates taper off, we will see another positive that's coming in. So if all of this were to happen, there is no reason why we will not see another growth year in 2023-24. And we hope to participate and maybe exceed that growth. That's the aspiration.
Okay, well, that's an optimistic note to round things up on. Thanks very much, Mr. Mahadevan, for joining us this morning.